Welcome, everybody. Welcome to our next webinar. This is going to be an incredibly fun conversation. You've heard me talk about the notion that every single industry is going to get disrupted. Every single industry is changing and being transformed as a result of exponential technologies, whether it's healthcare, finance, insurance, which we're talking about today, entertainment, transportation. Every one of them is going to be almost unrecognizable in the next decade because of what? Because of AI, computation, sensors, networks, robotics, 3D printing, all of these technologies converging to transform the industries. And it's also a time when the largest organizations on the planet have the opportunity to get disrupted by entrepreneurs. And today I'm super excited to welcome Daniel Schreiber to the conversation, the founder, the CEO of Lemonade, to talk about how one industry in particular is being completely reinvented from the bottom up. Daniel, welcome from Israel. I'm here in Santa Monica. A pleasure to see you, pal. Congratulations. Since I saw you last, Lemonade went public. What's it like to be a public company CEO?
Hi, Peter. Good morning. Great to see you again. I'm having a blast. I've had a blast pretty much every day since we founded Lemonade. Myself and Shai Wininger, my co-founder, some 5 years ago. As I like to say, it beats working, and that's been true since the IPO as well. So certainly having a really, really fabulous time at Lemonade.
Wonderful. Let me just set this up and then do a proper intro. So we're going to talk about how, when you're in the streets of Brazil or Manhattan or any Chicago, and you look up at the tallest buildings up there, the tallest buildings have the names of banks and insurance companies. And there's a good reason. That's where the money is. And Daniel, you and your co-founder have literally had the potential to reinvent this in a way that's extremely meaningful. And we're going to go into that here. So any entrepreneurs watching in my Abundance Digital community and those watching us on social media, this is a time to take out your notebooks and take some lessons on how you might actually go after reinventing industry that you care about. So, but first, Daniel Schreiber's bio. So Daniel is the CEO and co-founder of Lemonade, the insurance carrier built on AI and behavioral economics. Started not long ago, about 5 years ago in April 2015. Daniel is a tech leader with extensive leadership experience in organizations in the Fortune 500 global business space. As president of PowerMat, many of us have used PowerMat, provided the largest wireless charging network in the world. Daniel oversaw its transformation into an industry standard used by Samsung Galaxy in venues like Starbucks and in General Motors cars. Prior to PowerMat, Daniel served as the SVP of corporate marketing for SanDisk, again, another amazing brand. He's a graduate of King's College London and graduated first class honors with a law degree. And also, Daniel, you're a graduate of Singularity University. So if you don't mind, let's begin at the beginning. What were you doing and how did the idea of Lemonade come into existence? Because there's some personal roots there for me and for SU.
Absolutely. So when I left PowerMat, I needed to refresh and kind of broaden my horizons. I tend, as I am now at Lemonade, I tend when I'm doing a job to be pretty narrowly focused, somewhat blinkered, really trying to get the job done. And coming out of 4 or 5 years of leading PowerMat, I needed to survey the terrain, understand what's been changing in the world. And I took off a week and came out to California to do the Singularity University course there. And I was primed because I was really looking for my next thing. And I actually came to SU thinking that I was going to do it in the field of AI diagnostics. I'd spent a few months working in that field, and I'm pretty convinced that that's going to be transformed beyond recognition. And that, in 10, 15 years time, we will look back on medicine today, much as we do today on medicine in the 1800s. But ultimately decided that the competitive dynamics there weren't appealing, and I didn't fancy my chances of success. And while those cogs were whirling, in some talk that you gave at the course. I can't remember what the question was, and I can't remember fully what your answer was, but you spoke about peer-to-peer insurance. And that set me off on a trajectory of thinking, okay, well, insurance, I hadn't even thought about insurance. And then I started digging into it and got together with my co-founder, and we found a sector that is amazing. It is vast. You're talking about something like 11% of GDP in America. This is just a staggeringly large sector with 100% household penetration, but a sector that is entirely unchanged. So 12 of the Fortune 100 are insurance companies, and the average age is 125. 125 years ago, there were no airplanes and no antibiotics and no air conditioning. And the world has changed, but insurance hasn't. And a sector that is deeply unloved. And you take that trifecta, unchanged, unloved, and huge, and your entrepreneurial juices just start flowing. So we started working, and we thought about this peer-to-peer thing, and we ended up creating Lemonade, and we called it the world's first peer-to-peer insurance company. And I pinged you and I said, hey, Peter, we got to meet up. I'm doing that thing that you said. You and I met for coffee in a hotel in New York. And I explained to him what I'm doing. And he said to me, wow, Daniel, that is so cool. But that's not what I meant at all. You had this notion of healthcare and DNA sequencing for risk pooling. And so I like to tell people that the origins of Lemonade are one big misunderstanding.
I'll take it, though. That's great. Well, exciting. And it is for the opportunity that Lemonade represents. I think you'll agree with me, 1,000 other equal-sized opportunities that hopefully entrepreneurs here are starting to think about, because people get stuck in the way they do what they do, and there's a big energy investment required to shift industries. And it really takes an entrepreneur who says, why can't it be 10 times better, 10 times faster, 10 times more efficient, which is what you've done here with Lemonade. So let's begin. And there's a litany here, a list of what makes Lemonade different. I'd love to check that. I'm proud as having a small seed in the creation of this. I'm proud of what you've done. And I'm hopeful that it becomes an example across multiple industries. But let's take a list of the attributes that make Lemonade different from a traditional insurance company, and then let's dive into those.
Sure, and maybe I'll kind of continue where the story left off with the family story. So once we decided that insurance was something we were going to focus on, and wow, this kind of discovery that there's hidden gray area that nobody's looking at, and that is, as I say, so untouched and unchanged and unloved. What you would expect us to do is say, wow, you two are techies with 20 years experience in the tech sector. You know zero about insurance. Go study insurance before you make any kind of bold pronouncements about the sector. At least look up the Wikipedia entry for insurance. Do something, man. And Shai and I kind of did the opposite. So what we did is we decided to use our ignorance for all it's worth. And we took a room with a whiteboard, and we spent a couple of months saying, hey, we don't want to know too much about insurance. We don't want the knowledge curse. We want to do first principles thinking. We know what we know. We know consumer-centric innovation. We know technology. We know brand building. We don't know insurance. But we have kind of high school probability theory. How hard can this stuff be? Let's imagine how we would build an insurance company. And we imagined a business model and a technology stack and a user experience that would appeal to us. And we asked ourselves kind of the basic question of, why does everyone hate their insurance company? Why do they dislike it so deeply? And why do we? And I reached out, I hounded a Nobel laureate in game theory and another Nobel laureate in behavioral economics. And I just started thinking that this really comes down to game theory and behavioral economics. This is a game. You give me money now and you want me to give you money in the future. And how could we build this whole game differently? And we came to the conclusion that the problem isn't with the players, it's really with the game itself. The conflicts of interest that are manifest in insurance, the substrate on which it's built, which is so human intensive and paperwork intensive. And we set out to build the whole thing from scratch. So we founded our own insurance carrier. We're not just doing the technology. We decided we have to transform the business model. We created a business model which isn't conflicted today with insurance. You claim $1,000 from me. If I pay it to you, you're 1,000 richer, I'm 1,000 poorer. And that creates conflicts of interest. So we created a flat fee structure. You pay me $1. I'm telling you right now, I'm going to keep 25 cents on the dollar. The rest is going to go to paying your claims. And if there's money left over, it's going to go to charity. And we're not going to be in conflict one with another. So a contemporary business model. And then everything is built on technology. And the upshot of that is that you can get a policy. The median time to get a policy at Lemonade is 90 seconds. You're standing in Starbucks, you've already placed your order, you're waiting for them to make that latte. That's how long it takes to get insured. We pay claims, about a third of our claims are paid instantaneously, 3 seconds to pay a claim.
That's amazing.
97% of the time, the claim is taken, the first notice of loss is taken by a bot, not by a human. So really just transforming the whole business. And you end up with insurance that is cheaper. First-time buyers of insurance can save 50%, not 15%, 50%. And it doesn't take you 15 minutes. It takes you a tenth of that, which is 90 seconds. Getting paid claims quickly. And we ended up really seeing very rapid growth. So the insurance business has been growing at a compounded annual growth rate of above 400%. And as you say, 5 years after our founding, we're now public and traded on the New York Stock Exchange.
That is extraordinary. I mean, and honestly, it is the 6 Ds of insurance, right? Digitizing, dematerializing, demonetizing, democratizing access to insurance in an extraordinary way. You also made an interesting choice to become a benefit corporation. What's that about?
We did. And actually, this ties a bit back to abundance and to some of the stuff that you write and talk about. So narrowly speaking, it's about solving a problem with insurance, which is distrust, and neutralizing the conflict of interest. How do you build a lovable brand on top of a conflict of interest? You can't. So we changed the business model. We said, money that's left over, we're not going to pocket, because that creates an incentive for us to deny your claim. We don't want to be in conflict with our customers. And if there's money left over at the end of the year, let it go to a charity. I now, instead of having a financial incentive to deny your claim, I have an incentive to settle it as quickly as I can at the lowest cost and to get the highest NPS. I want you to promote my business and to lower my cost of acquisition and to increase my retention. And it changes your interests as well, because today you embellish your claim, and fraud in insurance is a huge problem, but it's not some hacker from the Ukraine or some organized crime from God knows where. It's people like you and me who are law-abiding citizens in other aspects of their lives. And when it comes to insurance, we let the devil out because we feel like it's an uneven playing field and we have to fight for ourselves. So we wanted to just bring insurance back into alignment with consumers so that they behave in the same way as they do in other aspects of their lives. And we did that by giving these leftover monies to charity, but think how that impacts your psyche. Because when you make a claim today, you embellish your claim because you can stick it to the man. You feel like you're fighting with it in a conflicted relationship with a nameless, faceless behemoth whom you don't trust. But at Lemonade, if you embellish your claim, you're not hurting me. You're hurting the charity that you designated for your give back cause. And that changes your psyche, that changes mine. It changes a bilateral conflicted relationship into a trilateral relationship because nonprofits are part of the whole business model. And that changes everything. And we have our give back once a year. We just gave over $1 million to charities, 34 charities designated by our customers. The whole dynamic changes. But if I broaden the point from just neutralizing conflicts and distrust in insurance, you like talking about abundance. Humanity is climbing Maslow's scale. Mm-hmm. We sell homeowners insurance and renters insurance. People that we are selling insurance to already have a roof over their head. So they are not on the first rung of Maslow's scale, nor on the second. And as humanity starts enjoying the fruits of abundance, we're going to seek gratification, and brands will have to cater to higher levels of the Maslow scale. And we're going to want to have community and meaning and self-actualization and ultimately self-transcendence. And I think that in the 21st century, brands that cater narrowly to just profit maximization and create a relationship that is purely transactional won't even profit maximize. You have to understand where humanity is going to and where abundance is going to and where our needs climb in the Maslow scale, and to build durable brands today, you have to be also talking on the realm of ethics and meaning and not just transactions.
Amazing. So you mentioned something in passing that that Lemonade is providing homeowners and renters insurance right now. Any other insurance that you're doing, or where might you be going?
Yeah, so we just launched health insurance for your pets a few weeks ago. And broadly speaking, we hope to cater to all of our customers' insurance needs. So we're kind of knocking off categories one at a time. So that's at least the aspiration. But today it's renters, condos, homeowners, pet, and hopefully other products to follow.
Interesting. Okay, well, we just got a dog, so I know where I need to go next for my pet insurance. I want to take this to the extreme, but I want to point out something that is something you said that I think is so important, again, for the entrepreneurs that are watching and learning. When you and Shai, your co-founder, jumped into this, you focused on first principle thinking, right? And this is what, if you read any of Elon Musk's work or how he approached Tesla or SpaceX, it's that same concept of, sometimes we're cursed, an expert is someone who can tell you exactly how it can't be done. That's one of my Peter's laws. And first principle thinking is more a matter of, let's look at laws of physics, let's look at the equations, let's look at math, let's look at reality, and from a first principle standpoint. Can you remember any of the sort of like the aha moments of the way it's done versus first principle said, why don't we do it this way?
Yeah, and I'll pick up on something that you said earlier, which is about 10x. I think that if you look at the way things are done and you look to improve them, you can always eke out a 10% improvement. And probably the incumbents can do that a lot better than any newcomer. It's very difficult for me as a newcomer to insurance to know how to do what State Farm or Allstate or Farmers or anybody with a name State and Farm in there somewhere. The idea that I could do anything better, their business better than them, is there's tremendous hubris there.
By the way, the whole concept of the farm is so last century. It's fascinating, right? It's like, oh, I should trust them. They're farmers too. Yeah, amazing.
I think you've got to go back a century more, even.
Well, probably 2 centuries. Right. That's right.
And by the way, the whole notion of I'm going to build a skyscraper, so you should trust me because I have the tallest building, is also really passé. But the idea that I could beat them at their own game is a nonsense. So somebody said to me a long time ago, they said, if you want to beat Kasparov, better challenge him to a game of ping pong, not to a game of chess. And I think it's the same idea, is that if you're trying to disrupt, don't do it by playing the same game that the incumbents are playing. They're much more experienced and skilled at it than you are. The first principles sounds like the harder thing to do. And when we went to investors and said, well, you guys mad? You're techies. What do you think you know about insurance? Don't build your own insurance carrier. Partner with the insurance carriers. You do the veneer, the technology in front of it. And they thought that our idea of building the whole damn thing, getting our own licenses, getting our own financing, our own capital, and building an vertically integrated solution, they thought that that was a much riskier and harder thing to do. And I'm convinced that it was the much easier way to go. It sounds harder, but it isn't really. And every step of the way, when people said about, what policies are you going to use, how are you going to underwrite, etc., was all so much. We used to call it actually the black hole, and I used to caution everybody in our business in the early days. I haven't had to for a while. I said there are going to be these gravitational forces pulling us towards doing things the way they're done.
I love this. I just have to interrupt because this is so true, and it is so it's so fundamental. Right. I saw this in the launch business, in the industrial military complex. Right. It's as soon as you start to anchor any of what you're doing into the old ways, you start getting pulled in, and the gravitational force is a great example. Or one requirement begets the next requirement, begets the next requirement, and all of a sudden you find yourself sucked in, and you're doing it the same way everyone else did it, and you can point exactly the reasons, and you literally have to start with a clean sheet of paper. And it's such an important lesson. Is it harder? Maybe, maybe not. But guaranteed, if you're really looking to do 10x versus 10%, it's got to be a clean sheet of paper.
100%. And today we've reached escape velocity, but it took a long time. And those forces are so powerful at the beginning. And I say it tongue in cheek, but I actually really mean it. Ignorance is bliss. Don't get distracted by how it's been done, and don't believe, as you say, the experts who say it can't be done. I'll give you one other story that I think you'll enjoy. So Shai is really the brains of the operation. And I remember in the early days, we didn't know each other that well. We hadn't worked together before. And people were pitching us on, hey, don't build your own policy management system and all the kind of the back end. There's all these vendors out there that will do it. You should really license it from them. So we met maybe 12 of the different companies, one after the other. And each one told us it's at least 18 months and at least $1.5–2 million. And we were a tiny startup. It was just me and him. And that seemed so long and so hard, so expensive. And Shai comes to me, and he's a really thorough guy. He really delves into technology. And he comes up to me after the 10th meeting. He says to me, Daniel, either I am missing something monumental, or I can build one of these on my Apple Watch while I'm driving home tonight.
That's great.
He didn't quite do it while driving home, but 5 people and 5 months later, we had the system built.
Where did you meet Shai?
There's a guy called Michael Iceberg, who's one of the most talented VCs I know. And he's an old friend. And as I was working through this peer-to-peer insurance, I went to see him and say, hey, does this pass the sniff test? He was the benchmark. No, he'd left Benchmark at the time. He'd started up his own fund. And he said, yeah, it passed the sniff test, and here's somebody you have to meet. And that's how I met Shai.
Nice. So we're going to be going to our Abundance Digital members and social media network questions in about just 10 minutes to get your questions ready. But I get to ask Daniel until then, just selfishly, because I miss you, pal, and I'm so proud of what you've built. Let's talk about the use of exponential technologies that's enabled you to do what you're doing now. And then I want to talk about what's possible in the decade and decades ahead. So talk about the technology that enables you, because I think you mentioned to me this earlier, ultimately insurance has simply been an algorithm for most of human history.
Yeah. So I like to think about what we've been doing with technology. The metaphor that comes to mind for me, at least, is the iceberg. So you have the 10% or so that is visible above the waterline. And that is the stuff that people understood and got excited about Lemonade in the early days. And I think up until a couple of years ago, and you know the insurance executives of the largest companies, they all knew about Lemonade, and they knew that you buy it by chatting to a bot, and they knew it's done in seconds, and that we pay claims in seconds and all that. But I think what they would have done, if you ask them about Lemonade, they'd have paid us the backhanded compliment of saying they've got a cool app and they're good at PR. And we do have a cool app and we are good at PR. That's I think what they failed to understand is that cool app, and that's the 10% of the iceberg that you see. Oh, wow, it's exciting tech, it's sexy, it's fun, it's easy to use. What I think they totally failed to understand is that cool app was generating data sets about 100-fold more voluminous than the traditional insurance interaction. You go to a broker today and you want to buy home insurance. You sit in front of her on the main street. If it wasn't for COVID, she'll ask you about 20 questions. You will be emitting signals all day long. You know, are you playing with your phone while you're answering, or are you paying attention? When she gives you a piece of paper to sign, do you sign it or do you read it first? Did you come in a hurry, or did you sit down? Yeah, did you come back 3 times? All of that is lost because her 20 questions don't include any of that. And that's all the data that the insurance company collects. Maybe they buy data from third parties, but you don't build a competitive advantage by buying data.
Same like health insurance, right? Ridiculously thin layer of almost meaningless data that's collected to make decisions.
When you interact with Maya, our bot, she collects something like 1,700 data points from that interaction. So it's about 100 times more data. And it turns out that those things are highly predictive. Now, we don't discuss the details, but I'll give you a couple of for instances. So insurance is about figuring out not the property, but the person and what kind of risk you are. Two people buy the same car, they don't get the same premium. We live in the same apartment, maybe you lock your doors and don't leave the gas on unattended, and maybe I do those things. That's really where the gravy is. That's really where the business is. So you want as many signals about a person as you can. If somebody searches for good insurance on Google before clicking versus cheap insurance, is that a signal? If somebody buys insurance at 2 a.m. versus 2 p.m., is that a signal? If they buy insurance in 50 seconds versus 5 minutes, is that a signal? Well, if you've built the whole stack, if you own the insurance company, if you see the claims, if they're handled digitally, and you close the loop from the marketing campaign through the acquisition, through the customer support questions, through the claim and back, then you've built a flywheel where each of those data points starts spinning faster and faster and faster. And that's the 90% of the iceberg. That's what gives it its heft, and that's what sinks the Titanic. And that is where it's really phenomenal. Because as you say, insurance has co-evolved with statistics for 300 years. Since Pascal and Fermat back in the 1600s. And the insurance companies today, like Lloyd's of London, were founded in the same place in the same time, and they've survived for 300 years. And if I asked you in 1700 or in 1800 or in 1900, and possibly even in the year 2000, who is home to the best statisticians and the best data sets in the world, you'd have said insurance companies. And if I ask you that today, there's no way in hell you're saying insurance companies. Right. So that is really the core of why I think insurance is even more disruptable and more susceptible to these changes than a lot of other sectors.
Yeah, I enjoyed when I wrote my last book, which I feature you and Lemonade in as well, The Future's Faster Than You Think. I have a chapter on insurance, and I remember doing the research on Lloyd's coffee house and all that was, I mean, the capability at the time was humans getting together for coffee and putting quotes on a blackboard and underwriting, putting their names underneath a particular quote, which is where underwriting came from. And unfortunately, the insurance industry stayed with the old technology. So let me take this forward a little bit, especially since you're branching out, and I'm excited to have Lemonade branch out into a multitude of insurance. Today, health insurance is not really health insurance; it's sick insurance. And life insurance isn't life insurance; it's death insurance, where it's the system pays you after you've gotten sick, and it pays you after you died. And so, you know, I put forward the question, and fire insurance pays you after you've had your fire. And so maybe this is sort of conversation part 2 for the future of Lemonade. But I still am enamored with the idea of true insurance eventually being the policy I buy to prevent me from getting sick, to prevent me from dying, prevent me from getting fires. You know, could you imagine in the fullness of exponential technologies that's what insurance could become in the future?
I think it can move in that direction. I don't see a future where there's no butterfly effect. In other words, you can play the odds, and you know you can live a healthy lifestyle. It doesn't guarantee that you won't get cancer or stroke or anything else. It's about playing the probability theory. You bend the curve, but you don't eradicate the risk. So I do think insurance will be leaning into helping people understanding their susceptibilities, whether it's in health or in other areas, and then will be highly motivated. There'll be aligned interest to mitigate those risks. Some of that is already happening. You see some companies, particularly out of South Africa, that have been doing some very interesting work there in the health insurance sector of really trying to keep their customers healthy. In the US,
I know the insurance company, yeah, and it's and we have the ability to do that. And I imagine a business model that says you pay us as long as you're healthy, and when you're sick, we start paying you. You know, in aligned incentives. I also imagine a fire insurance where we're going to come in and we're going to outfit your house, and we're going to prevent any fires, or we're going to prevent any robberies, because of the ability to have the wholeness of data that we're able to crunch and provide sort of an anti-fire, anti-robbery service. And that's, sort of down the line potential.
The elements of that. So let me just tell you about one thing that I think you'll enjoy. We have an internal bot. So we have Maya, who sells policies, and Jim, who pays claims, but we've got Cooper, who's our internal bot, who runs a lot of our internal processes. We kind of think of him as our Jarvis. And Cooper gets imaging feeds from NASA satellites twice a day. So there's NASA satellites that overfly the continental US twice a day and have heat signature imaging, which Cooper will use machine visioning to interpret and identify wildfires. Very topical, sadly, today in California, and we have a lot of business in California. And that system went live for us actually just as the campfire broke out a couple of years ago. And we identified campfire on our screens before we heard about it on CNN.
Nice.
And then we can send warnings to our, and now it identifies many weather patterns, and we can send alerts to customers to try and protect them. By the way, as it was getting data sets and training, it identified one of SpaceX's launches and mistook it for a fire.
Nice.
But yeah, you can see that kind of thing becoming more prevalent. Absolutely.
Yeah. So it's fascinating. So part of the reinvention, and I remember speaking about Lemonade and the traditional insurance industries out there, and perhaps their initial response to what you built. It reminds me of Blockbuster and Netflix. Sort of Blockbuster having the chance a number of times to acquire Netflix, and just turning it down on 2 occasions and saying, they're not a threat. And it's incredibly myopic, but it's also true that traditional industries rarely are there. I can't think of good examples where traditional industries have completely reinvented themselves from the inside out. It really has to be by adjacency, and so it's important. Behavioral economics. Talk about that 1 second. We have a common friend that you pulled in to Lemonade. Talk about what that idea, and then we're going to go to questions from the audience.
Sure. So I'll just, if I may, comment about your earlier. So I got to know some CEOs of some of the biggest and best insurance companies, and they're impressive people. And they see the writing on the wall, and they know what's coming, and they're not blinded by anything. And there's almost nothing they can do about it. It's just amazing to see how heavy the machinery around them is. And it really is the innovator's dilemma. They've got assets that suddenly reveal themselves to be liabilities. For 100 years, they thought that the fact that they have 40,000 brokers is an asset. But actually, in the direct-to-consumer era, it turns out to be a massive liability. Or they've got a tech stack that they've been building since the 1980s. But it's much more of a black hole than a black box, and they just have to pour billions of dollars into it to just keep feeding this beast, and they've got nothing to show for it. Or they've got teams that have been groomed for legacy preservation, not for business transformation, and they just have the wrong skill sets and the wrong cultures. And it starts even with they've got the wrong shareholders. They've got shareholders who just want a 5% dividend and don't take any risks, and therefore they've got boards and shareholders who won't support bold moves. No. So everything is arrayed against them, very, very difficult for them. Behavioral economics, I think, is fascinating. And as I said before, I think that you can think of insurance in game theory terms. I use kind of behavioral economics and game theory interchangeably, even though they're distinct. We started off by saying, what is it about insurance that brings the devil out in people? Why does nobody like their insurance company? At a fundamental level, insurance is a social good. It's about a community of people pooling the resources to help their weakest members in the hour of need. That's almost the definition of a social good. Why is it the most distrusted sector in the entire economy? And for us, it came down to conflicts of interest. And conflicts of interest is about, if you want to fix it, it's about acknowledging that my moral fiber is no superior to that of anybody else. And if I am tempted I will also behave in a way, or writ large, we will behave in a way that we won't be proud of in retrospect. The problem isn't the players, it's the game. You have to craft a game that aligns interests with consumers. And there's this old notion of the Ulysses contract, which is a game theory notion where Ulysses, the old legend, there were these sirens who would sing beautiful songs, beguile sailors into their grasp, and then they would devour them. Ulysses is the only person who heard the song of the sirens because he tied his hands to the mast of the ship. So he couldn't change direction. He couldn't get too close to them. Everybody else thought, I will know when to pull back. They trusted their future self. Ulysses did. And we've kind of taken a page out of that book and built an insurance company where we don't make money at first approximation by denying claims. The money is out of our reach. We've tied our hands. It goes to charity, and that changes the whole dynamics. And that's really the fundamentals of the Lemonade brand, the brand promise, and its business model. And that's really rooted in behavioral economics.
That's absolutely beautiful. I love that story. All right, well, let's go to questions from our Abundance Digital community. Nia, do you want to kick it off?
Yep. So first question from Keith. What sort of timeline or data needs do you anticipate before you can get to covering products of greater complexity? For example, another member, Didrik, asked about ensuring warehoused inventory.
Interesting. I'm not sure that there are many products of greater complexity than homeowners insurance, to be honest. You compare it to something like car insurance, where there's only so many makes and models of cars and so many dynamics. Homes are endlessly variable. Every address is unique. It has different exposures, different weather patterns, different crime patterns, different kind of windows, different kind of roofs. Everything about it is one-off. So actually, homeowners is one of the most complex products out there. I don't know about warehousing and inventory. We're not in the commercial insurance space, so I can't talk to that intelligently. But I think that the kinds of products that we're already selling are of a sufficient level of complexity to give us reasonable confidence that this model is extensible to other lines of insurance.
Nia?
Which countries could this work in, and how does it change country to country?
That's a great question. We just spoke about the behavioral economics and aligning interests and increasing levels of trust. And whenever I talk about this, people say, well, that's lovely. It's very naive. It wouldn't work in my country. And there's this notion that, yeah, maybe in that country, yeah, those people are good people, but my people, it would never work. So we're predicated on the idea that humans are basically a good bunch of folks, and that if you treat them with respect and you align your interests with them, writ large, that will pay dividends, and that you can change a cycle of distrust into a virtuous cycle of trust if you pay it forward. So there's something perhaps naive, but certainly optimistic about it. And so far that's paid off. And we think that the basic components of the Lemonade value proposition are global in nature. It's one of the interesting things that we've seen. Insurance stops at the water's edge. So all of the brands that you're familiar with in the US, State Farm and Allstate and Liberty, they basically operate in America, but in Europe, nobody's heard of them. And then you look at European brands, AXA and Allianz and Generali, and nobody in America has heard of them. Lemonade, when it was 3 years old, already launched transatlantically. We've got a pan-European license as well as American licenses, and we launch in Germany and we launch in Holland, and we're going to roll out other countries throughout Europe. Again, predicated on the idea that insurance that is hassle-free, aligned, digital, and instantaneous has universal appeal. But there's more to it than that. There's one other thing I'd layer into it. Peter started off by talking about the skyscrapers that everybody builds. And whatever city you're in, whether it's the TransUnion building in San Francisco or the MetLife building in New York or the Swiss Re building in London, it really is that the skylines are dominated by insurance companies. But that's also reflective of the business model. If you want to launch in a new country, you have to go in there with 10,000 people, build a skyscraper, and then you can launch. Our 2 largest states in the United States are Texas and California. Not surprisingly, they're 2 of the most populous states in general. We have 0 employees in Texas, and we have 0 employees in California. We launched in Germany. We have 0 employees in Germany. So the idea that you can create a company on a digital substrate rather than a human intensive one also speaks to global expansion, because when the marginal cost of launching another country isn't building a skyscraper and populating it with thousands of people, it's flipping a switch, then the whole economics change pretty dramatically. So that's why we do think that what we're doing, both in terms of basic appeal, has global applicability, although time will tell. It's still early. So that's the thesis.
Daniel, how many countries is Lemonade in?
We're in the US, and the US, unfortunately, is 51 different regulatory jurisdictions.
Of course.
So that's not so easy, but we now have licenses across the US that comprise about 90-something% of the US population. And aside from that, we have a pan-European license. Europe is made up of many countries, but actually a single license gets you all of them. So we're licensed across the European Union and the UK.
Thanks. Nia.
Next question from Ivor. What are your thoughts on applying AI to healthcare insurance in the US?
Well, we have launched health insurance for pets, and we're using all the same technologies there. I'm not overly enthusiastic about health insurance just because it's such a political and politicized business. So there's an election coming up. I'm going to stay well clear of that. But in the last election, you saw how dramatically things can change in terms of the health insurance for humans. So at least today, we're not focused on that. We are a P&C insurance company, so we have property and casualty on the mind. We will spill out into other sectors, but I don't think health insurance will be early on for us.
Next question from Stanley.
One could imagine, Daniel, that it is an area ripe given the amount of data that's possible versus the amount of data that's collected.
That's right, and there's an insurance company called Oscar that is doing really interesting work in that space.
Thank you. Nia, back to you.
Next question from Stanley. Is Lemonade intuitive for younger adults that are just getting used to being financially self-sustained? Are there learning resources included in the onboarding process to educate new customers?
Stanley, that's a great question. And the answer is yes to each of the components of your question. One of the things that we've found is that, unsurprisingly, our demographic skews young. 70-75% of our customers are under the age of 35. More striking and more surprising is that about 90% of our customers are first-time buyers of insurance.
Wow.
Now that's nuts. If you watch more than 5 minutes of TV, you'll see a commercial that is all about I switched and I saved. 50 minutes can save you. I switched to Liberty Mutual. You've seen the commercials ad nauseum. So the entire industry is playing a game of I switched and I saved. And it turns out that we're not playing that sport. We're kind of playing an entirely different game. And we are mixing my metaphors here, but rather than taking the fruit from somebody else's basket, we're going to the orchard and we're picking it ourselves. So 90% of our customers are first-time buyers of insurance. And in fact, among first-time buyers of insurance, the new cohorts, we are number 1 or number 2 in terms of market share in the US. So even though we're still a small insurance company by the standards of the sector, among those new cohorts, among new business, we're actually a pretty dominant brand. And I would put it to you that nothing predicts future market share as much as new market share. So that is a great telltale sign if you're building for the long term, because those cohorts then stay with you, they grow with you over time. So we are seeing young customers come to us. We are educating them. We see some things that are interesting. So for example, we get a surprising number of claims for events that predate the inception of the policy. Usually that's a sign of fraud. Somebody comes on board, they buy a policy today, they make a claim for something that happened last week. That's usually a fraudster, but not so with Lemonade. Oftentimes it's people who just don't really understand what insurance is. This is their first time doing it, and they'll be very upfront about it. With Lemonade, you make claims by speaking into your app with just recording yourself. There's no forms to fill out. And we see people will record a story. Hey, I came home, there was a flood, so I quickly bought insurance. Can you please pay my claim? And so we have to educate people and explain to them that's not entirely how it works. But yeah, absolutely, Stanley.
Next question from Jennifer. How did you come up with the name Lemonade?
So I mentioned before that the brains in operation is Shai. So he came up with it. I had a really embarrassing 3-letter acronym that I never bring up because I'm just embarrassed by what I thought would have passed for a good brand. And Shai very politely and sweetly kind of explained to me that that really won't work. And he came up with Lemonade. And it was perfect. It was a little bit subversive. A lot of people said to us, oh, insurance company, nobody will ever trust a brand Lemonade. It's kind of too juvenile. So we like that. It's memorable, it stands out, it's not the same. We adopted a mantra of one of our VCs, Michael Iceberg, who we mentioned earlier, who said that different is better than better. So Lemonade was different. It played on the Americanism of when life gives you lemons, make lemonade, which is really what insurance is all about, right? Taking something that is sour and turning it into something that's sweet. And it also had echoes of social responsibility, the lemonade stand, the idea of something that's communal and is trying to help the community in which it's a part of. And for all of those reasons, it just resonated really powerfully with us and has been very good for us.
All right, next question from Alicia. Daniel, can you recall an aha moment in the early stages of Lemonade when colleagues and investors may have not believed in you, but you were internally convinced that your business would take off?
The standard entrepreneurs crossing the chasm.
Wow. Alicia, that's a great one. It's funny, I was always optimistic that this would work. I tend to be a glass half full kind of person, but I was never convinced. I've been around the park enough times and I've had enough failures to know that success isn't guaranteed, and it's a lot of serendipity and good fortune. And I've been much more successful in this business than in my prior business, but I'm not much better professional in this business than in the prior business. So there's all different things that have to come together. But as we've got going, my levels of conviction have grown exponentially. They really have. But I will tell you that early on, there were a lot of things that just looked like existential, almost binary outcomes that were very unsure. So for example, we decided to create our own insurance company and to apply for a license in the great state of New York. New York is regarded as perhaps the most demanding insurance regulator in the world. Mm-hmm. It was a very contrary thing to do, but we thought if we can pass muster there, we'll get licenses elsewhere, and you can't reverse that. That's not symmetrical. So take on the toughest regulator, meet their standards, and then you can cascade from there. We almost didn't get our license. I had underestimated how difficult that was going to be, and I'm not sure that it was a smart bet. You flip that coin 10 times, maybe it comes up 10 heads once. And maybe we were just lucky, and in retrospect, we're thrilled that we did it, but I'm not sure. And a lot of people cautioned us about that. Another thing that we encountered is that insurance isn't something you can beta test. So nowadays, we can be very experimentalist because we have all of our licenses, but before you pass that very high barrier, you're not allowed to sell anything. You can't do a fake insurance policy. It's a crime. So you're very limited in how much you can test before you make all of your investments, which is counterintuitive. So on our very first day when we launched in September of 2016, we were taking bets about, would the dog eat the dog food? Does anybody want what we're building? So we have had a lot of moments as we were building where, would investors believe, would consumers believe, would regulators believe? And I did have internal conviction. And in retrospect, I'm thrilled that it was justified. But even in retrospect, I'm not sure that all of our bets that worked out were smart bets nonetheless, if that makes sense.
Amazing. Great lessons here for entrepreneurs. And it really, a lot of times one of the key entrepreneurial lessons is the winners are the people who just don't give up, who go one extra round, right? I jokingly refer to a lot of my most successful efforts have been overnight successes after 10 years of hard work. All of the you name the greatest companies out there, and people see the last part of their success story and amazing, nothing to $1 billion in under a year. Well, no, it's a decade of work underneath that.
No question. You might enjoy, Peter, there's a lovely quote by Winston Churchill's private secretary who said that Churchill spent his finest years preparing his impromptu remarks. So.
I like that. Yeah.
From Chris, if both of you started a new business today in the same disruptive lens that Lemonade took, what industry would you have your eye on and why?
I'm going to pass on that one. Maybe Peter can do a better job. I mentioned earlier how blinkered I am and focus on what I'm doing. Peter, can I throw that over to you?
Yeah, sure, happily. I mean, there are two industries, and I keep on hammering on them because they deserve massive disruption. It's education and healthcare. Education industry, like the insurance industry, hasn't really changed in centuries, and that's with a plural there. It's still the sage on the stage and a group of kids in the class, half of whom are bored, half of whom are lost. And at least domestically in the United States, healthcare, we spend so much money yet have such awful outcomes. It's if you've heard me speak about this, it's Baroque and broken, right? It just both deserve. We deserve better. We as humans deserve better in education and healthcare. And both of those can be fully digitized, dematerialized, demonetized, and democratized. So I'm excited to see, and I think COVID-19 is the asteroid impact that's shaken up the table with enough capital, people, resources, that there are probably hundreds of startups out there that will start to see materializing in the next few months to years. So we'll see some incredible progress there. But those are the two areas, without question, massive and full of opportunity.
Next question from Eric. Daniel, what is the sniff test?
Oh, the sniff test is just a superficial kind of, you give a 20-second pitch and somebody says, yeah, feels right, or nah, it doesn't feel right. So you're kind of sniffing. It's like, yeah, does it smell right or doesn't it smell right? That's the sniff test. Nothing more than that. And I think that this is kind of the Daniel Kahneman thinking fast and thinking slow stuff, that people who are experienced, who have kind of gone through the machine learning in their own machine and start having pattern recognition of decades of doing something, their sniff test counts for a lot. It doesn't mean it won't ever lead them astray, but they can tell within a few seconds, they'll get a sense of whether this is something worth investing more time in and ultimately investing in or not. And that kind of wisdom can be very valuable. So that's what I was referring to.
Okay, what are the golden metrics that you use to keep your company culture from pursuing paths of least resistance, the things that pull us back to conventional ways of thinking?
That's a wonderful question. And honestly, it changes a lot in the age and stage of the business. So when you're two folks starting up your own company, there's one set of challenges. And then when you bring on board the first 3 people, that's a different one. And today that we have 400 people across 4 time zones, it's different again. So I'll tell you one of the things that we're doing at the moment, have been doing for some months and are continuing to do, which is, but that's really germane to the current state of our business. We could spend more time than we have talking about the different stages, which is splitting. So we've adopted what's known as a squad structure. Spotify pioneered this, and different companies, including Lemonade, have really developed this much further over the last couple of years. When you have 4 people or 40 people, you're still very intimate and small. And as you start growing, and Lemonade is doubling every year, you have to build a whole new Lemonade every year. It creates cultural challenges. And one of them is you start slowing down. and you start creating legacy, and you lose a lot of the nimbleness. So what we're doing is we built up our business on squads, which are small groups, and squads kind of from the military notion of a group that can function independently in the field, and they've got everything that they need to be able to survive and thrive.
How big is that? What's the number of a squad typically?
10 people or less.
Yeah. And by the way, if those of you who, if you read Bold, this is the 2 pizza rule from Jeff Bezos. Any team that can't be fed by 2 pizzas is too big.
That's great. So that's kind of what we do. And when the cell grows, it divides. So we keep splitting. And what that means that every person in a squad is in a startup, and it doesn't matter how many other squads they are, they're in a startup. They've got their own mini CEO and a product person and an engineer and a data scientist and an analyst and a QA person and a designer and everything that you need to create a fabulous product. And they'll collaborate with other startups, and they form what we call tribes, where they'll be focused on homeowners insurance or something like that. But each person will be working on a different function, and they can move incredibly fast. So a traditional insurance company that has thousands of people on staff in IT departments and spend billions of dollars a year will release 1-2 production releases every quarter. They'll plan those 18 months in advance. They'll have committees. And I'm not saying this disparagingly. That's the way traditional large companies work. We have about 15 production builds a day with a team that's so much smaller. So we are not building the structure that I just outlined is not optimized for efficiency in the sense of saving dollars. There's some duplication there. If you just wanted to get the most streamlined team in terms of budgets, you wouldn't build it the way I just outlined. But if you're trying to optimize for nimbleness, responsiveness, and speed and agility, that's really what you have to do. And that's what we do today.
That's great. And Daniel, that's probably a great question for us to close out on. Super thrilled by what you've been building, and excited to continue to put you forward in front of our community. So I look forward to revisiting this a year from now, and to see what you've been able to build. And so thank you for reinventing an industry to make it more efficient and make it more friendly and make it more, just better all around. So thrilled about that. Let me just mention before I close out with Daniel here, tomorrow is our next webinar at 10 a.m. Pacific time, 1 o'clock Eastern time, is with 2 incredible entrepreneurs, Tabor McCallum and Jane Pointer. They're the CEOs of Space Perspective. Imagine hopping onto a balloon that carries you up past 100,000 feet into the stratosphere, where you can actually spend 8 hours with a view that looks like outside the space station, but without the challenges of rocketry. This is balloons that are reusable. Jane and Tabor are friends of mine for 30 plus years. I'll say more about it, but Space Perspective is an incredible company. You'll hear about it tomorrow if you join me at 10 a.m. Pacific time. Daniel, your closing advice as an entrepreneur, if you're talking to entrepreneurs out there who have been sort of like on the edge of an idea, trying to think about it, what's your go-to advice for them?
Honestly, Peter, I'm really leery of dispensing advice. Okay. I love sharing my story and talking about Lemonade, but I don't feel best positioned to give out generic advice, and I try to avoid the platitudes or the kind of Hallmark card stuff. But if I may, I'll end by, first of all, thanking you, Peter, for your support and help all along. And it's wonderful to talk to you, my friend. And if I had to give any imparting wisdom, I listened to this man and it paid off. Do the same. How's that, Peter?
That's very kind of you. Unexpected. Okay. Appreciate it. Daniel, thank you. Congrats again. Check out Lemonade. Check out Lemonade for homeowners, for renters, for pet insurance, which we just got a pet, so I'm going there next. Anyway, thank you, Daniel. See everybody, Abundance Digital tomorrow, 10 a.m. Pacific time, 1 o'clock Eastern. Take care, my friend.
Bye.